Good evening, folks. This is Andy Pedraz with Special Academy, and we're on the start of the week session for the Forex Trading Room on November 3rd of 2019. As usual, we will go through our standard agenda, a look at the prior week's results, our currency strength meter for the past week and the past month, fundamental announcements on the calendar for this week, a look at the major pairs on the daily charts, any set of we see in progress, and a few words in conclusion. Change has been swap cost. We continue with the same three trades open as we had at the beginning of last week, a short on the USD CAD and shorts on pound dollar and pound JPY. The USD CAD is still carrying a significant amount of profit, and actually we did have a retrace throughout last week that put us back 100 pips or so. But the market is quickly moving back to where we were, and then hopefully exceeding that marker. So we'll see how this market evolves. But so far, that trade has been a solid keeper, a solid producer, and we'll let it continue running. Pound dollar and pound JPY are also carrying profit. Nothing happened on the Brexit front, or at least nothing market-worthy happened on that front. We'll see also with these pairs how they continue to evolve in the coming weeks. For now, we will not be changing any of these trades, just let them run. He did close out a couple of trades at a very small profit level and jumped into one of them again in the same direction. So no significant change. Any difference in the growth factor is more attributable to swap cost than to anything else. We do have 7 trades open right now. Most of them were at some level of loss, nothing dangerous, so to speak. But they were losing, and that's just normal trades as they evolve. So we'll be holding on to those 7 trades. Again, either they perform for us or they will at some point hit their stop loss, or I'll get bored with them and close them out if I see that there's a market shift or the potential for one in the works. On the short-term account, we had a pretty good week. We're still underwater on this account, but much less than before. We made some nice profit this week. All but one of our trades were profitable, and at least a couple of them, or actually 3 of them, had some nice levels of profit as the week evolved. In particular, the USD pairs moved very nicely in our favor throughout most of the week. The week was, and I guess I should go into our next chart before I say this, we had a pretty good week, but in general, it started and finished mostly at the same level. So there wasn't much week-to-week movement, but there was a lot of intra-week. So some of the pairs did go up and down throughout the week, even though they returned pretty much to where they had started at the end. That means, as we can see with the account performance, that long-term and intermediate term didn't change much, but since we did have that intra-week movement, we took advantage of it in the short term, which is pretty much how that works. I already mentioned the USD CAD short on the long term, a retrace, but it's still looking good, and the fact that pound didn't do too much this week. Our RSM, our relative strength meter for the past 30 days and the past week. Let's start with the week. We can see that there was, as I said, a bit of movement, specifically in a couple of the currencies. The CAD in particular had a bad week on that retrace, but as I said, the new week is already starting out pretty positive for the CAD. The Australian had a good showing. It pretty much gained against everybody else, as did the Swiss, and we did take advantage of that Swiss movement against the dollar. The euro, pretty middle of the pack. Pound, as I said, didn't move much, really only gained against the CAD, and that was more the CAD moving into weakness. The yen, middle of the pack as well. The Kiwi had a good week, losing out only to the Aussie. The dollar was a loser, and we'll do some commentary on what the dollar is doing as we go through the charts. And the metals were both here and there. For the monthly, we see that the pound was the key gainer. But again, that's probably not going to last too long. We'll see what happens. The yen, the clear loser, and the dollar also a clear loser. The rest of the currencies were middle of the pack for the month. Silver had a good showing. Gold not as good in the 30-day view. Fundamental announcements on our calendar for the week. Not as heavy a week as last week, thank God. We had 7 or 8 high impact fundamentals, most of them interest rate decisions coming out last week. So it was an absolute nightmare, especially Wednesday. We were pretty much on the conference every other hour throughout the day. So this week, a little bit more tranquil. We have the interest rate decision out of the Reserve Bank of Australia tomorrow around 10:30 p.m. So we will be trading that live. We have the employment change numbers out of New Zealand on Tuesday in the late afternoon. Also, we'll be trading that. We have the Bank of England interest rate decision on Thursday at 7 a.m. Horrible hour, but what are you going to do? So we'll be trading that one as well. And then we have that same day, Thursday, in the earlier mid-evening, I should say, the Reserve Bank of Australia's monetary policy statement. So those will be the 4 fundamentals that we will be live trading. Information on what time exactly will be in the email summary that goes out. Okay, and with that, we can jump into the charts, starting with oil. Oil had a nice bit of a recovery week, but again, it is mostly sideways. We can see that range going from 58 all the way down to 50.50, and it's now getting closer to the top of that range. And I wouldn't expect it to break out in either direction for a while. So we may be in a bit of a sideways market for oil that will last well until it breaks. It could be months. It could be even more than that. So we'll see. Geopolitical events, of course, will be the spark that can light this powder keg. But until something significant happens, I wouldn't expect a breakout in either direction. Euro dollar, the euro against the dollar, well, it's been going in both directions. The week before, we had the dollar gaining against the euro significantly, and last week it went in the opposite direction and undid all those gains from the week before. So it is towards the top of that range. Resistance did hold. We'll have to see how the dollar and the euro bounce as this new week begins. But at this point, I wouldn't be looking for trades in either direction until we see a breakout, always accepting the short-term account. On that account, we will be trading whatever the market is doing any given day. We're not looking to marry these trades, just get a quick in and out profit. But longer term, definitely we have to wait for the next breakout. Pound dollar, very susceptible to Brexit election in about a month's time, a general election in the UK, where they'll be voting for pretty much a new prime minister. I'm going to guess that Boris Johnson is going to be in the running anyway, so it might be a vote for the same prime minister, but there will be a reshuffling of the weight of each party within their parliament. So what Boris is looking for is establishing a majority so he can have a little bit more leeway in his Brexit negotiations and Brexit plans in general. And of course, the other party is looking to upset that and perhaps even take control of the government, which, again, either one of these things happening would definitely make the pound move. But we might be in for a little bit of a sleeper on the pound until that actually does happen. 12th of December of 2019 is the date of that general election. For now, the pound dollar seems to be bouncing between a couple of hundred pips worth of a range between 130 and 128. And currently it is very near the top of that range. I'm still looking for movement out of it, but something needs to happen before we see a nice breakout. USDJPY, we had a general weakness in the yen that's been going on for more than a month now. And then towards the end of last week, that suddenly changed and the yen recovered. We actually traded this one successfully, I think, in the short-term account. So we made some of those gains. And of course, and actually the intermediate as well. And we're back into that trade. So we'll have to see how this continues faring. It hasn't broken the trend line, so technically we're still in an uptrend. And of course, resistance holding means we're also inside a wedge. I would be looking to, obviously, I would prefer to break the trend line since we're already short on the intermediate term account. But ultimately, a breakout in either direction will be traded. For now, we're cautiously hopeful that it will break towards the bottom. USD Canadian, of course, we are short on this pair long term. We had a significant retrace last week to the point where I moved my stop loss so we wouldn't be taken out of that long-term trade early. That seems to have paid off as Friday it reversed course and started heading back down towards support. And on the market open today, it's already breached that level of support that it was just above on Friday. So it's looking good. We're looking, obviously, for it to go back to the prior low from the beginning of last week and preferably keep going. So we're still looking for about 1,000 pips on that long-term trade. And so long as it does continue to move towards the bottom, we'll let it run. So this week is going to be key to see if the CAD has the strength to keep going down. USD Swiss also sideways, went up all the way to resistance the prior week. And then last week, it just headed back towards the bottom. This is one of those that we traded very successfully on that drop, but on the short-term account. So we have to be very much aware that it is sideways when you look at a longer-term chart like the daily. So we're not going to be looking for any long-term trades necessarily until there's great support. I'm eagerly waiting for that to happen to write it down towards the bottom. In the meantime, we'll try to take as much short-term profit on this pair and a few others as we can. The dollar, the Aussie, as we had a pretty good week, so it did go up. It breached resistance, kept going. It is following a pretty good trend line on its way up, and it's actually far away from that trend line now. So it might be moving sideways to meet the trend line, might be doing a little bit of a support test, or it might continue heading up. We now have a confirmed break, and we are trading this one on the intermediate in the direction of the break. So we're trading it long, and we're trying to trade it up to the 70.5, which is about 150 pips away from where it is right now, or even to the top of the chart if it chooses to keep going. I'm not sure that it will, and if anything, it's going to be more dollar weakness than Aussie strength that pushes this one towards the top. So we'll have to see how all these events that are developing right now actually end up concluding. So we've got threat of impeachment against the president. We still got the Chinese trade wars going back and forth. We've got elections here in the U.S. Midterm elections are going to be happening, or not midterm, but everything except presidential. So we're going to be doing local elections and some other stuff here in the U.S. On Tuesday. So that may move the needle a bit as well, as it will be a pretty good, I guess, bellwether of what sort of party lines we can expect the voting population taking for the general election we'll be having in the U.S. next year, in exactly 1 year. It's going to be election day is always our first Tuesday in November. So next year, 2020, we'll have presidential elections, and all of this is playing out right now in anticipation just to see which way the political minefield is headed. So a lot of things that can impact the dollar this week, and obviously this pair, among others, might be affected. So it's looking good for long. We'll have to see how the week begins, but for now, cautiously long on the Aussie dollar as it now has breached resistance. Kiwi dollar didn't quite manage to breach that next level of resistance, so it is still pretty much trading between 64.25 and a bottom of 62.25, so a 200 pip range. We're actually short on this one, which is probably going to act as a hedge against the Aussie dollar. So we'll see which one moves the most and take our profit that way. But cautiously short on the Kiwi dollar for now. Aussie CAD, and indeed all the CAD pairs, we had that very devastating retrace last week on the back of their interest rate decision and their monetary policy statement. But on most, probably all of the pairs, it did find resistance, didn't breach. We'll have to see how the week starts out on these. But Aussie CAD is another one that I really do want to trade back down to the underlying level of support around the 0.89. which is going to give us about 200 pips of potential profit, and perhaps even deeper, as this pair has been bearish for quite a long time, since back in April of this year. So we'll have to see how this evolves. I'm looking to trade it down. It is sideways, no matter how you spin it. It's been sideways since July, and we're looking for the next breakout, preferably towards the bottom. Euro Swiss, we're short, and it's coming back to life. That resistance that we use for our stop loss has held very nicely. It keeps bouncing off of it. Obviously, we wanted to break the trend line and keep going down, but this is more a game of patience than anything else. So long as that resistance holds, at some point we're going to get our payoff, and the trade is looking much better right now. In fact, we were almost at break even as the week ended than we've been looking for a couple of weeks at least. So it is moving in that sideways channel, and we're looking for a ride towards the bottom of the channel. Looks like we may have the opportunity to get one this week or next. Euro pound, you can see how almost perfect flat the euro pound has been for the last couple of weeks. So again, we're waiting for some development out of Brexit or UK politics in general. I'm betting on pound weakness before we see anything else. So I'm looking to trade this one up towards the top of the chart. Not sure that's going to happen, but we are waiting on that break of resistance to get taken into a pending order. So that's already in place. If it does breach the 87 level, I think is where we placed it, then we will start going in long on this and try to ride it up towards a Ichimoku cloud cross, or even to the top of the chart. So again, more depending on fundamentals than anything else. So for now, we're going to keep out, but we already have our pending order in place. Euro JPY also finding some nice resistance on those crossing trend lines over there at the top, starting to drop nicely. I think we were have an open trade or a pending order on this one to take us in if it drops much lower, either or. And we are looking to trade it towards the bottom of the chart. I think that's still the preferred direction. I don't see it breaking out towards the top unless something changes drastically. So we're looking for that opportunity to ride this one down. Euro Canadian, again, the CAD, really steep retrace last week, but you can see that it hit resistance, stopped, and was heading down already on Friday. We'll have to see whether it continues heading down this week. Ultimately, I would like it to undo that retrace either this week or next week. But anyway, tell us that it's going back down. I think we have a pending order on the Euro CAD as well. Pound JPY, we're going to see this on all the pound pairs. They're pretty flat, pretty much stuck either at resistance or support, waiting for that next move out of Brexit or the UK's political scene. And no change here, but this one is also susceptible to the yen gaining strength, which is another clear possibility. We're already short on the long term because I think that resistance above it is going to hold, and I'm just in the trade waiting for what I think is the inevitable drop. Obviously, that is just my opinion. Doesn't need to happen, but I think the odds are very much in our favor for that. Aussie JPY also bouncing off of resistance. I think we either took a trade on this one on the short term. Yeah, short term, definitely. And I think this may have been our one loser on the short term account. And we probably have a pending order if it does breach support at the 74 to take us in short on the intermediate term account. No change to that. It'll happen when it happens. Euro New Zealand, we got taken in on Friday. We had a pending order to take us in if it breached support at the 173, which you can see it did, and it then quite as promptly pulled back up. So I think this is our one significant loser on the intermediate term account on open trade. And well, it has been heading down for quite a few days. We'll have to see if this new week makes it continue to head down, which is probably going to be the case, and start giving us some profit. Otherwise, we'll see what we need to do to manage that open trade. But this is the newest trade on the intermediate. Again, a pending order that was triggered to go short on the breach of support, and we'll have to see how it evolves this week. Pound Canadian, the CAD retraced. Obviously, that's given on all the CAD pairs, but it is finding resistance. It hasn't breached that 170.75. I would be looking at an opportunity to trade it down, but I need to see it moving first. The movement may come directly from the CAD, not the pound. The pound, as we said, is pretty much stuck in a sideways action until something happens. But the CAD is capable of moving on its own, and it may give us a pretty good opportunity to trade it back to either of those trend lines that are rising from the bottom of the chart. So we'll see how that evolves this week. And last but not least, our pound Swiss, another pound pair that is almost perfectly flat. It is below resistance. It's above support. We're waiting for something to happen to wake it up. At the very least, a trip down for a trend line test would be much appreciated and would give us a couple of hundred pips worth of potential profit if and when it does happen. So keeping an eye on it. That is the end of our chart review for the week. Setups we see in progress. The pound, as I said, is having a timeout and is not moving. It's waiting for something to happen. But don't let that fool you. Something can happen at any point in time. So we've got to keep looking at these pound pairs, maybe setting up pending orders to take us in either direction on any breakout. Dollar pairs, the dollar is at a crossroads, as I mentioned. Both internal and external geopolitical events are starting to worry the market. The Dow Jones is going up one day, going down the next. The dollar is shaky. The impeachment proceedings, the Chinese trade wars, whatever is happening in Syria and Turkey and the Kurds, 5 different things and none of them are looking too good. None of them are looking too bad either. But the market does not like uncertainty. So that is weighing on the dollar, and I'm seeing some dollar weakness across the board. And indeed, we took great advantage of that dollar weakness last week on the short-term account. As usual, I'm going to be waiting to see how the new week begins before we start taking trades, especially short-term. But I wouldn't be surprised to see a bit more dollar weakness before all is said and done, or maybe we're at the beginning of the much advertised dollar crash that has to happen at some point. The Canadian pairs, I've said this a million times. I'll say it one more. The CAD retraced this past week quite heavily, but that was expected because it had gone into strength for quite a while, quite heavily as well. So it's normal for the market to zigzag. So it zagged. It is still pointing to strength, however, longer term, which is why we still have that long-term trade open. Be very careful trading it shorter term, though it could go in either direction before it picks what I think is going to be a continuation of its strength move. Japanese pairs, the yen is shaky as its safe haven status makes it attractive one day, unattractive the next. So it really is a reactive currency right now. There's nothing much happening in Japan itself that's going to make the currency move, unless the Japanese do change the interest rate decision this week, which is not expected. The expectation is no change. If they do change it, that's different. But for now, the yen is just simply reacting to everything else happening, which is why it's very shaky and uncertain as to direction. Obviously, another currency waiting on some clear developments, probably outside of Japan, before it does pick a direction. So again, it's going to be reactive until further notice. And last but not least, the euro. The euro is still looking very frayed. It's only gaining ground against the dollar, which is also looking pretty frayed, and either holding on with some currencies like the pound, or indeed starting to look weak against the yen and against the kiwi in particular. It's starting to look like we might have an opportunity for some nice gains on a drop of the euro against those currencies. So we're already in at least one of them, the Euro New Zealand, and obviously we'll be looking for opportunities among the rest as the week and the new month start evolving. And that's pretty much it for me this week. Parting words, I have to stress this, and I do stress it every now and then, just to keep reminding people the importance of having a plan. One of the key weaknesses of many traders I see is that they're essentially winging it. They don't have a clear plan or trading system. It just, this week looks like the dollar is weakening. Let's short the dollar. Midweek, it doesn't work out. They go in the opposite direction. Then that doesn't work out. And the losses start compounding. Every trader is going to have losses. I have losses, but mine are contained, and most of you guys have been with me for quite a while now. You realize that every now and then I have a losing period, but it's never something that that becomes concerning. It's never, he blew 70% of the account or something like that. It's normal drawdowns, and most of the accounts are actually headed in the other direction into gains. The gains are never set in stone. We always give back some of the gains, because if you're not risking money, you cannot make money. And when you're risking money, sometimes you're going to lose it. So yes, at some points in time, it may be tempting to go rogue, and it may even work out. I've had, before I became a systematic trader, I used to go rogue quite a lot, and sometimes I made tens of thousands of dollars in a week. But that was more luck than anything repeatable. So yeah, luck does have an impact at times. But ultimately, if you're trading without a plan, you're going to fail. Those who trade with a plan and follow it will be consistently moving in the right direction. You might not be moving by tens of thousands of dollars a week, because that's not how it works, but you'll be consistently growing your accounts. And at the beginning, it can be frustrating. It can just seem like it's eternal. The results may be too small to see. But you will reach a tipping point by account size, by your experience in trading, and then those gains will start compounding. They'll start snowballing. So you have to have patience and a plan. Those are the trader's two best friends. And that's going to be it for me this week. Any comments or questions from anyone? Okay, and thank you very much. And we'll be back tomorrow, 8 p.m. Have a great rest of a weekend. See you soon.